Hello there, YouTuberians out in the world. It is Tuesday, August 25th, 2009. If you're wondering why I sound so excited, it's because we're about to go into something that's pretty boring. So just sort of step it up a notch. I know a lot of people have heard me go on about gold. I'm bullish on gold, but I want to show you the real proof of why I have been buying gold. I've been buying gold for a long time, probably since about the 550 level, because I believed it was going higher. But I am still significantly bullish on the price of gold. And I want to go through a few things today in the chart just to give you a representation of why I have those views. Myself, I have been a technical analyst since I've been about 13 or 14. Technical analysis does work if you're looking at charts. I've used it in the past. It's made me a nice sum of money, and I will continue to use technical analysis until charts pretty much fall off the system, which I don't think will happen. Yes, news and the economy is important, but in terms of looking at future patterns, future prices, and how to make profit from charts, I'm going to go you through a little example today and show you why technical analysis is so good. And also I want to show you two key ingredients to the price of gold at the moment in terms of technical analysis on why gold could be set. I'm not saying it's going to shoot up and go to $5,000 an ounce, but I'll show you two reasons why I'm still bullish on gold, and we could see a significant bump up in the price of gold in the coming months, or further on down the track. First of all, have a look what's happened since October 2006. Gold has had this huge rally up, and I mean longer term we have been rallying up, and that's pretty obvious. The first thing with gold, we've had a huge big dip down here, and then the market actually came back up due to a lot of buying again. But here we go back to technical analysis. I want to show you a significant pattern that I use consistently to make me money in the market. This is called a head and shoulders, or an inverted head and shoulders here. There is your shoulder, there is your head, there is your other shoulder. Okay? Now I love these patterns. It basically means if you ever see a pattern like this in the market, and you can draw your neckline across there, which is obviously our resistance point. Now what I want you to do is have a look at the extremely good head and shoulders pattern we have. Actually, sorry, an inverted head and shoulders pattern that we have here. You see here, nice resistance line. We have a shoulder on the left side, we have the head, and then we have another shoulder that's flipped up. These sorts of patterns have made a lot of money for me when you're going long the market, but you have to actually wait for it to break this resistance point here. But in terms of technical analysis, this head here up to the resistance point over here is likely, if it breaks out through the resistance point up here, to double from there, the start of the head there, up into the neckline. So if it breaks through this line here, which I said this is the neckline here, if it breaks through, it's likely to shoot right up and go as high as about the 1200 level, maybe even more. These inverted head and shoulders are fairly reliable. They don't work all the time, but it gives me all the more reason to be bullish on gold, especially if it comes and breaks that psychological level there of $1,000 an ounce, or just above $1,000 an ounce. Now the second rule of technical analysis, another pattern that I use consistently all the time, and yes, it does make some money, is this little pattern here. Now this is even more significant, this pattern, because this is what has been happening over the last couple of months to a year. You have what's called a symmetrical triangle pattern, and the rules of the asymmetrical triangle pattern is from down the baseline here to up the top of the triangle pattern will repeat itself once it actually breaks out on the upside here. So we are likely to see another confirmation of gold going up again to the $1,100, $1,200, $13 region once it breaks this neckline here, that psychological level of just over $1,000 an ounce. A double confirmation for gold to go long. Pretty good, I must add, in terms of the patterns. Very sharp. I think what makes this even more powerful is you have the head and shoulders here down the bottom right, but then you also have a triangle inside a head and shoulders pattern. Now that for me is a very strong signal that gold is ready to go higher. There's no guarantees. Remember, I can be wrong and things can turn back down, but I have seen these patterns perform the similar in all my years of being a chartist, and I've seen many of these patterns play out similar. But like I said, it has to get through this level here. You have to play it conservatively. Once it breaks through this $1,000 level, it is very or highly likely to shoot straight up, and obviously could be the catalyst for the next leg run higher on gold. At the moment, you'll see that level, it's definitely a psychological level there at about $1,000 an ounce. Every time the market gets bought up, sellers come in and the market comes down. Every time the market comes up to that same point, the sellers come in again and the market gets hammered back down. Every time more buyers come in, sellers yet again force the market back down. Every time the market's been bought back up, yet again sellers at that $1,000 an ounce level. So that is really why I am a bull or bullish on gold. If you like this video, please rate it below and comment below. I appreciate all the kind words. If you want to see more things like this, jump on down to our site, www.forecastfortomorrow.com. That's www.forecastfortomorrow.com. Enjoy, have a great day, hope this video helps, and I'll talk to you all very soon. My Space Secret, signing off.